Would you not want to know about an early warning signal or early warning signals that tell you something about your hotel's long-term sustainability? Well, what do you mean by long-term sustainability? Well, whether the hotel can survive over the long term. Am I being dramatic? No. Let's find out how. Profitability ratios are those early warning signals. But what are these profitability ratios? Now let's get to probably the most important profitability ratio, the gross operating profit. Now, the gross operating profit is a hotel financial ratio on profitability that uses two KPIs or key performance indicators, gross operating profit and total revenue. And we shall see how these two are used to arrive at a gross operating profit percentage. Gross operating profit is popularly known as GOP. Let's look at the two elements that make up the gross operating profit. Number one, total revenue, as you can see, is being pointed out. And number two, gross operating profit. Now, total revenue takes into account all revenue for the hotel. We shall see more about that soon. Now, the gross operating profit, in short, is total revenue less all operating expenses. And we will see what all operating expenses actually mean. So as we said earlier, gross operating profit is a profitability ratio. So what does it do? It measures profitability of the hotel after deducting all operating expenses. Again, it bears repeating. Note the 2 points about the gross operating profit. It is after deducting all operating expenses. So we are referring to operating expenses and not non-operating expenses. But first, what is profitability? Well, the profitability can be defined as the long-term ability to earn profit. A very simple definition. Or you could say it's the ability of a business to survive in the long term, because to survive in the long term, you need to continue to earn profitability. But ability of a business to earn profit has two elements. You need to have hotel revenue to continue in your business, but you have to incur expenses which create a form of risk for your business. And finally, revenue minus those expenses result in profit. So you could, in a manner of speaking, say expenses reduce profit. That reduced profit is a risk, and so a risk is related to profit. It's important to know that profit is also called earnings. But the hotel is a seasonal industry and earnings fluctuate, meaning go up and down. It is these earnings that keep fluctuating that cause risk. Let's now understand the two elements of the gross operating profit, total revenue and gross operating profit itself. So what is the formula for gross operating profit? We shall be using here Paradise Hotel's current month for 2019 as is being pointed out. Number one, gross operating profit, which we saw earlier, divided by 2, total revenue, multiplied by 100. Now we multiply by 100 because we need to have a percentage result for the gross operating profit. Applying the numbers here, we get to 42.3% gross operating profit. But what does gross operating profit of 42.3% actually mean? Well, it means that the hotel has been able to retain 42.3 cents for every dollar of total revenue earned. You could say that Paradise Hotel earned $1 of revenue. For every $1 of revenue earned, it was able to retain 42.3 cents. Your next question would be, is there any industry norm for gross operating profit? Well, there is no such norm that can be generalized or used in a generic way, because gross operating profit depends upon many factors. Factors like hotel size, your revenue level, average daily rate, to name only a few. Now, gross operating profit here can be considered good because Paradise Hotel has been able to retain 42.3 cents out of every $1 of revenue it earned. That's a really good index. But what does this gross operating profit ultimately indicate? We have seen earlier that gross operating profit depends upon two factors. First of all, total revenue, and then secondly, very important, operating expenses. It's important to know that if total revenue increases, gross operating profit will also increase. If operating expenses are managed better, as in they are decreasing, gross operating profit will increase again. The most important thing to understand is that either of the two results in gross operating profit increase. At the same time, if either the total revenue decreases or operating expenses increase, your gross operating profit will come down. Your next question will be, what do operating expenses include? What is that formula calculation and what is included in that? Well, operating expenses are of two kinds. Number one is something called direct operating expenses. Note that what is being shown as number one, direct operating expenses, are relating to the rooms department, food and beverage department, and a retail department. We will shortly see something unique about these are revenue producing departments. Number two is something called an undistributed operating expenses and is being pointed out right now as number two. Undistributed operating expenses are expenses that cannot be related directly to one department, either rooms or food and beverage or retail. So you could call them overheads. Direct operating expenses are required. The one that you see in this slide are all those expenses that are required to earn those relevant revenues. Rooms operating expenses to earn the rooms operating revenue, food and beverage, retail in a similar way. Now notice that these expenses marked as one, as we have seen earlier, belong to rooms department, food and beverage, and retail departments, the revenue producing departments of the hotel. And what are these kinds of direct operating expenses? You can see in the slide, they are payroll and related expenses and other direct expenses directly related to that department. Now, what are some ill effects of gross operating profit decreasing? What happens if gross operating profit starts decreasing? Well, the gross operating profit is considered the most important profitability KPI for a hotel. You could call it the bread and butter. So if gross operating profit starts decreasing, the final net income or overall profitability of the hotel is going to suffer. So what is the moral of the story? Well, the moral of the story is that the focus should be on total revenue on the one hand and operating expenses on the other hand. Now, what is the goal that a hotel need to set itself? Well, the goal should be to increase total revenue and manage operating expenses, as in decrease them. Now, there are three features of gross operating profit. Number one, it is boosted by high total revenue or higher total revenue, as we saw earlier. It's also boosted by lower operating expenses, as we saw earlier. But number three is when a combination of higher total revenue and lower operating expenses is considered the best indication of how a gross operating profit can grow. Now, that means the GOP or gross operating profit is a function of both revenue and expenses. Often GOP is considered only a function of revenue, but it's not. Even expenses influence it. Let's now recap our understanding of gross operating profit. It's very important that gross operating profit be compared between years. For example, as you can see, 2019 versus 2018. And what are you actually looking for? To ensure that GOP is not less than the previous year. Then, on the other hand, you have revenue that should be growing year over year, as is being shown. So that should be revenue growth as well. And then finally, expenses should not be increasing too much over the years. They will tend to increase a bit, but not significantly, because that affects the gross operating profit. So what are the three takeaways for gross operating profit from this video? Well, number one is that gross operating profit is arrived at by total revenue less all operating expenses. So you could say that gross operating profit is getting influenced by both revenue and operating expenses. So the focus should be on both. And then finally, what's the best way to earn the highest gross operating profit? Well, ensuring that your revenue is on a growth phase and your operating expenses are managed well, as in decreasing year on year. Now, you have learned how the gross operating profit can be earned in this video. Do you want to learn how to earn the hotel revenue itself in the first place? Well, click on the video above, which shows you how to budget and achieve revenue.